Sunil Garg, Managing Director and Head of Research with APAC region. He represents JPMorgan Equities. He joins us live from Hong Kong. Sunil, good to have you back. Thank you for joining us. Sunil, as an outsider, how bad is India looking now to you?
You know, the fundamentals have been looking pretty challenging for a while. And I think if you look at the headline indices, they actually seem to have held up very well. I think the big sort of derating we've seen in some of the smaller and mid caps clearly, not reflected in the, headline indices such as the Nifty and Sensex. I think the fundamental challenge right now is that RBI has very limited policy headroom, and I think that's causing a lot of challenges. I think the currency weakness and some of the recent strengthening in oil prices, I think adds pressures on imported inflation. So at this point in time, I have to say I used to be a little bit more optimistic, but at this point, I think one needs to be defensively positioned in India.
Sunil, it's been pretty bad when it comes to the mid-cap end of the market. Do you think those kind of crunching bear market whiffs are going to start off for the frontliners as well? I mean, how much more weakness? That's the question, everyone would wonder about.
See, I think the most interesting thing is that if you look at the financial sector, especially amongst the big cap, private sector, blue chip names, they've held up very well. But I think given the macro environment, there is clearly a risk to slow down in earnings, and there is clearly a risk to asset quality in certain parts of the portfolio. And that is a substantial part of the market, as it is in most other countries, and so it is in India. So I think the risk to frontliners following on from the mid caps and the small caps definitely exists. As I said, if you just simply looked at the Nifty, you wouldn't know that there was a big economic headwind going on in India.
So how long before we actually see the likes of IT, pharma, as well as select FMCG as well, fall in line with the rest of the market? Or do you think this dichotomy that we're seeing in the market is going to continue for some more time?
It's tempting to basically call for a rotation away from the defensives that have done well and look kind of expensive on the face of it. I will take an example from China, where we've had a similar issue, similar, not the same, of an economy undergoing a period of slowdown, and a lot of defensive stocks continue to do very well, and there was a temptation to call for a rotation. That kind of never happened. And I think at this point in time, investors are likely to look for visibility of growth rather than getting too fixated on valuation. So unless we see real opportunities in earnings turnaround, real visibility, I think one should continue the defensive bias to portfolio in India.
Let me give you an example here. HUL is trading at a P multiple of 40x. And the company is only poised to grow at about 13 to 14% according to Bloomberg estimates. So where is margin of safety?
So look, without getting into specific names, Nikunj, I think the point I would make here is that the growth certainty or visibility on certain companies like the one you mentioned is probably a lot higher than many other companies. So I think it is the certainty. So when you talk about margin of safety, I think that comes from the visibility of growth as opposed to a lack of it. So yes, there will be a lot of commodity related and deep cyclicals which look very cheap, but can you be certain of the earnings? So the margin of safety is not just a valuation concept. I think it's also a question about, do you have confidence in the earnings?
The monsoon session as well kick-starts. Anything that you're hoping that would get sort of passed in the cabinet this time around? Any important reform that the market is awaiting?
See, we are probably in a fairly short political window from a reform perspective. So, are we holding out for huge amounts of structural reform to come through before the elections take place next year? Probably not. So no, not holding the breath for anything major. I think right now the task for the central bank really is to get some confidence back in there, and I think there's clearly, a lot of constraints that they're facing right now.
Okay, Nifty has gone down again, and this is bad news. On Friday, we failed to capitalize on global cues. Today also, we have failed to capitalize on global cues. Sunil, is it too late to sell banks now, with the exception of HDFC or HDFC Bank? Most of the banks are down about 30 to about 40% from the recent highs. Do you think now it is time to be a buyer there rather than being a seller there?
See, at this point in time, I don't have a huge amount of confidence from a top-down perspective to be having a major positioning in financials. I think at the minimum, you've got a growth slowdown, which will prevail. And as I think briefly touched upon earlier, there is going to be some asset quality, some collateral damage under asset quality for the banking sector. So that's not really a great environment for owning financials. You do have a very steeply inverted curve. And at this point in time, there is limited visibility on when RBI starts to unwind some of the monetary actions they undertook a few weeks ago to stem the currency. So until you start to see any of that, it's very difficult to make a case for owning financials, at least from a top-down perspective. And within financials, again, I would go back to, the example you were giving earlier about some defensive names. I would just have a very defensive quality bias in a portfolio, be it financials or otherwise.
What about the mid-cap end of the market? How soon before stocks reach the buy zone, or would you still steer clear of the mid-cap end?
My preference is not to get fixated on valuations. Things look very cheap, but I think the focus is always, do I have visibility on earnings? And I do think that, and just by definition, you will see a weaker economy hurting smaller mid-sized companies a lot more. You've had a pretty sharp depreciation in the currency, so the risk of any unhedged positions hitting some of these companies and impacting their profitability, I think is still very high. So I think, without getting into too much of a fixation about the market capitalization, the focus I would have is on where do we have growth visibility. Now, that could be a mid-cap company, that could be a large-cap company, but growth visibility is and earnings visibility is the most important thing to focus on.
Sunil, at the current juncture, whereas it is very easy to make a bearish argument, macros are bad, earnings are not strong, margins haven't bottomed out, economic recovery has been delayed. But where is the good news? Because bad news always comes with good news and good always comes with bad.
See, if I just zoom out away from India and look at emerging markets and look at two of the big emerging markets, China and India, you have a economic slowdown and questionability on earnings in both the markets. You might have a structural slowdown in China, and in India you have a cyclical slowdown that is probably yet to run its course, so you probably will see weaker economic growth prints. So to that extent, I think, this is the biggest overhang, I would say, on Asian and emerging markets in terms of the backdrop doesn't look great relative to the DMs. I think the only glimmer of hope, if you like, is, and I talked about not going too much into rotation, but one can't ignore the fact that the divergence in performance between emerging markets and developed markets has become very, very large, particularly in a historical context. So can we see some bargain hunting, at least closing some of the gap? That's probably a small shred of hope to hang on to, but that's certainly one thing to point out.
How are you pricing in impact of a good monsoon? Are you advising your clients that they should buy rural stories, should they buy into two-wheelers, or they should still stick to simple consumption? Because good monsoon means consumption demand will pick up, it's not going to come down.
Yeah, I think in general consumption will help, and I think we've seen in the last couple of years some of the rural opportunities or rural area opportunities because of a weaker monsoon get impacted. So clearly there should be at least some benefit flowing through from them. I think we've certainly seen, for example, automobiles taking a hit over the last few years. So if you have at least a better monsoon helping the economy, then yes, some of the cyclical sectors start to benefit as well.
For the overall market though, Sunil, what do you think is going to lift the market off from the slumber? Would it have to be something by way of, strengthening of the currency, or would it have to be a global factor?
I think a lot of the factors that we are talking about in India are specific to the market. So again, let's also be careful on, when we talk about the market. As I said earlier, the Nifty is actually holding up relatively okay compared to a lot of emerging market peers. But I think at the underlying level, there's clearly been a lot more weakness. I think the biggest pressure point right now is clearly the currency. If you go back, not so far back, in fact, I think there was optimism about RBI easing monetary policy. They'd taken some steps towards that, and then you had the big weakness in currency, and they had to unwind that and tighten monetary policy. So I think if we got some strength in the currency, that clearly gives RBI a bit more policy headroom. So if I were to pick one variable to watch very closely, I think that would be the currency.
Sunil, we've seen a breathtaking rally in U.S. equities. U.S. equities are up for 6 weeks in a row. The street is divided on the prospects of U.S. recovery, and some would argue that the U.S. economy is still running on steroids. So if U.S. equities, they hit some kind of a roadblock in the medium term, in the short term, do you think that could be bad news for us? Because globally U.S. equities have not cracked and Indian markets are down. What if U.S. equities also crack?
Yeah, I think directionally that poses a risk, but let's also not forget that there's been a substantial underperformance. So could we get a period of relative outperformance in emerging markets? It's possible, but I think directionally, if the U.S. market does correct, then I think we should clearly, I think Asian markets and emerging markets will take a cue from that. But talking about the U.S. market, let's also take into account the fact that this is, when we hear all the talk about the Fed reducing the size of its stimulus or QE tapering, as I guess it's called, this is in response to better economic data. This is in response to better jobs data. So therefore, you have actually prospects of a better economy. So if you think the U.S. Stock market has done very well, the S&P has done very well, it's also been in response to better economic data. If you contrast that, I guess, in emerging markets, then you have growth that has been built on leverage in the last 5 years. That's reaching at least some kind of a peak, if not a peak, at least a slowdown. You have a growth challenge in Asia and in emerging markets. So to some extent, I think the equities performance is reflecting a growth differential for now.
Is there anything that you like out of the telecom space? These stocks have been showing some momentum after having a vicious last 1 year, some decent earnings as well, and again, it's the base factor playing up there.
Look, I'm going to shy away from talking about individual stocks, but as I said, it's a lot more defensive bias right now that we would be advocating on India.
Right, Sunil, appreciate your time, and it was fantastic to have you back on ET Now. Certainly hope to see more of you going forward.
Sure.